Hello everyone, this is Sniper at Sniper Trades, and today we will be going over market structure and everything you need to know about market structure. Now, starting off, what are the three things the market does? And that is, it will break out, pull back, and trend, break out, pull back, fail, and reverse, or break out, pull back, and stay in the trading range. So I will scroll down here and just give a quick example. Let's say that's our high of the day, and this is our low of the day. We can also say this is our closing price, which I will emphasize these are the three levels that you will be focusing on every single day, no matter what. Monday, Wednesday, Friday, doesn't matter. The market could start off from the close, coil, we can have higher highs, finally they break out, pull back, and continue off of this high. That's one scenario. Another scenario is it could break out, fail, and reverse, or it could break out, pull back, and stay in a trading range. Those are the three things the markets can do. And just by understanding that, you could develop a thesis on any given day for a trend, a reversal, or to do nothing and just wait for the market to set up for a best trade setup. Now, I'm not going to say what pair this is exactly, because the asset doesn't matter. What is consistent throughout every market is that you will see higher highs, higher lows, or lower lows and lower highs. So I will start off on this Monday here. Get to a good level. And I don't have the 3-hour windows on here for a big reason. Today we're just going to focus on the highs and lows of the day. So as you can see, these light blue lines are my previous day's highs and lows. This line here is my weekly close, and I have daily closes also on the rest of the week. Those are the three levels that we will be focusing on any given day. So I will start off on our Monday, which is inside Friday's range, but they break out of that previous day's high, they pull back, and they continue. They're retesting the highs that were made earlier in the day, which were inside. One thing about trading inside the previous day's high and low is that technically that is 50-50, unless there is a larger setup at hand, for example, first red day. But when they break out of the previous day's highs or lows, that is a large indication that we have other time frame traders involved into the market. What are other time frame traders? 1 hour, 4 hour, daily, weekly, etc. They could either accept business to trend or reject business to reverse. Now, if you've studied Dalton's book, Mind Over Markets, he briefly goes over out of balance and imbalanced markets, undervalued and overvalued areas. So technically, anything above the previous day's high could possibly be overvalued. Anything below the previous day's low could be undervalued. They've broken out, found business, pulled back, and continued to trend, and has closed out of balance. So out of balance is just a day that closes outside the previous day's range. Imbalance is a day that closes inside the previous day's range. Every time we get an out of balance market, that could be an indication that the next day we could get a trend or reversal setup if that presents. So for example, I would just go on with market structure. We've made a high at the beginning of the day. They've pulled back, gave us a new high, and pulled back in 3 pushes and has given us a W formation at closing price. Paul Tudor Jones, always imagine your entry at yesterday's close. That can give you insight on whether one or both sides of the day, buyers and sellers, may be trapped. So if anyone has went shorts from the close, they are trapped. If anyone has went long from the close, they have consistently been in profit the entire day. Starting from the breakouts, they pull back and continue. The next day, this is our daily close. So anyone that has went long from the close is now in a negative position. They've pulled back, giving us a low. They've expanded that range and worked into that low. It has given us a higher high on the inside. Higher highs on the inside is the recipe for the dump and pump. Lower lows on the inside is the recipe for the pump and dump. Now, why is this not considered lower lows on the inside? Because this is a breakout and a pullback. This has a possibility to continue to trend. Now, one thing I would like to put emphasis on is range expansions. Every time they expand the high or low of the day, that is considered a range expansion. Now, let me just give you a quick example here. So we have a high of the day. They put in a low of the day. When they expand that high, that is a range expansion. When they expand the low, that is a range expansion. So we originally had our high and our low, and they've expanded both sides and given us a new high and a new low. Excuse me, my alarm has went off. But just to put emphasis again, this is also how we would develop a thesis on who's in the money and following the money in general. A break of the high indicates that there are potential stops at these lows. A break of the lows indicates that there are potential stops at these highs. Now, the break of the previous day's high indicates that there are potential stops at the previous day's low. A break of a previous session indicates that there are potential stops below that session. So for example, they've put a low in place. They've pulled back, worked into the high and continued lower. So where's the money? Here. They worked into this low, so anyone's going short is now trapped. They trigger these highs, which indicates that there are potential stops from the breakout traders up top down low. They pull back, 1 push, 2 push, 3 pushes for the continuation. Now, what are the 3 things the markets can do? Breakout, pullback, trend. Breakout, pullback, fail and reverse, or stay in the trading range. This is a breakout, pullback, continuation. Going on with our market structure, we have a low put in place, and they continue to break higher throughout the day. We are outside, which means other time frame traders are involved, and when other time frame traders are involved, there's a possibility of a large ranging day. So if I go here, they've put in a high, they break out, pull back, and trend. They break out, pull back, and trend. And they break out, fail, and reverse all the way to the low of the day. Each time they break higher, these swings are now where potential stops are being placed and also trailed for potential targets on the move back down. Now, how do I know that this is going to reverse? We will go over that in later videos, but I'm simply demonstrating the three things the markets can do. This is a breakout, fail, and reverse. They expand the low of the day. This is a range expansion. They expand the low of the day. This is a lower low, lower high, and the continuation, lower low. So going on to the next day, this is our low, and this is our high. Our previous day's high is intact, but just by following market structure, once again, lower lows, lower highs, and they work down into the low of the day. This is our high in the very beginning of the day. This is our low. They pull back, trigger the highs. So where's the money? Down low. They trigger the lows, lower lows. So where's the money? Up high. They trigger the highs. So where's the potential stops? Down low. Does not mean they can immediately go down and hit those stops, but it's a very, very high chance that they will hit those stops given the behavior of price and the timing to confirm that thesis of either a breakout, pullback, and a trend, a breakout, fail, and reverse, or a trading range. So they've broken out of the high of the day, they've pulled back, they failed, and they reversed. But this is overall moving in the downward direction of the trend, and we are inside the beginning of the day, the previous day's high and low range. So we restart. This is our high and low, and this is our new low of today. This is our high, and we wait for them to do one of three things: breakout, pullback, trend, which is this scenario here. They break out, pullback, and trend. They can break out, fail, and reverse, which is this scenario here. Now, going on in later videos, you will see how these setups indeed evolve and play out, and which setups could be taken. But they break out, they fail to make a new high, trapping traders potentially up high, triggering the previous day's high. Again, remember, when previous day's highs and lows are triggered, we have other time frame traders involved, and they can either accept or reject business. In this scenario, they have rejected the business and pulled the market back in balance. Also, hitting the stops on traders who are long in the London gap time window during the New York session. So this is a breakout, pullback, fail and reverse, lower lows, lower highs, lower lows, which we can go and draw these out. Our low, they break out. So our lower high is where the money is. They break out, they pull back, and continue. Everyone should be familiar with the break and retest, which they continue. They break out, pull back, engulf, and continue. They break out, pull back, and continue. Again, what are the three things the markets can do? Breakout, pullback, trend, breakout, fail in reverse, or stay in a trading range. Now I want to put some emphasis on the master pattern, which is very important in understanding market structure. There are 3 different variations of the master pattern, and all the master pattern are stop hunt patterns that usually occur every time we get a box formed throughout the day or a session itself. So if you look at the very bottom left hand corner, that is the trend scenario. Hit the stops, breakout, pull back, and trend. At the very top, you have hit the stops, reverse, breakout, pull back, and continue. And on the bottom right, we have hit the stops, and they're hitting the stops one more time on traders that may have went short early to reverse and trend. So just one more time to put more emphasis, we have the breakout, pullback, continuation, the breakout, fail in reverse, and breakout, pullback, and stay in a trading range, which could still offer a sell high or buy low scenario, but a lot of the times can just be a scalp back to that high or low. Now going to the charts, we're gonna just identify a few of these patterns. Here we go with a breakout, pullback, and continuation. Hit the stops. Traders who may have long the breakout, maybe they have shaken them out or at least taken them at break even for the continuation. We have hitting the stops above the previous day's high and hitting the stops on traders who may have shorted this engulfment for a return back to the low from where the move began. We also have hitting the stops above the previous day's high, hitting the stops below the low of the day to break out, pull back, and reverse. There are cleaner scenarios than this, but just to give an example of what the 3 things the markets can do, and that is breakout, pullback, trend, breakout, fail in reverse, or stay in a trading range. Here we go again. We have our breakout, pullback scenario, a breakout above the previous day's high, a pullback hitting the stops at the low of the day for a trend that continues throughout the next day. And here we go once again, they hit the stops above the high of the day. They hit the stops below the low of the day to pull back and continue. They've even had a master pattern throughout the session itself. Hit the stops, pull back, and continue. So if you can identify these master patterns, it will help you develop a thesis on whether you should be looking for the trend or the reversal. Going on here again, they hit the stops above the high of the day. 3 pushes, 1, 2, 3. 1, 2, 3. They hit the stops below the low of the day. They pull back and continue that trend. Hit the stops, pull back, and continue. So once again, these can be identified to confirm your thesis throughout the day and or the session. And that is the master pattern and its 3 different variations. You could get them hitting the stops and pulling back to the low from where that pump or dump began, and you can also get a follow through that breaks out, pulls back, and continues. But that's all based on the template at hand, whether that is a 3-session template, a 3-day template, or a 3-session template on day 3. Here we have another example of the master pattern. We have 2 different scenarios here, the trend and the reversal. So they hit the stops at the high of the day. They pull back, hit the stops at the low of the day for the explosive trend trade back outside. But they also hit the stops above the high of the day once again. They hit the stops below the low of the day. They pull back and continue to reverse, hitting the stops at the previous day's low. High of the day triggered. The money is on the other side, the low of the day. This was also a Friday. So just again, breakout, pullback, continuation. But you also have your master pattern hitting the stops. This was also a stair-step pattern. 1, 2, and 3. High bull engulfment. Hit the stops on traders who went long, pull back, and continue. So everyone above this closing price is now trapped up high. So I have these charts here, and I'm just going to be demonstrating the 3 things markets do: breakout, pullback, trend, breakout, fail, and reverse or stay in the trading range. I will also be demonstrating the master patterns and how they will evolve. As you can see here, I have the 3-hour windows on this chart, and I also have the major round numbers on this chart as well. So starting on our Monday in the A's in session, they give us our initial high and low of the day. They give us our initial high and low of the day. They break out, pull back, and continue. And do take note that this is the previous day's high, one of the 3 levels that we will focus on throughout the week and every session and every day. So they break out, hitting the stops on anyone who may have went short from that 1st-hour engulfment. They pull back, hitting stops on anyone who may have went long in the London Open with that engulfment. They coil and they continue. We obviously had 8:30 news on the calendar, and that news event wiped out the low of the day for the continuation long. Huge pump on our Monday. You do not have to chase large candles or even volatile moves. You can just wait for the weekly template to set up for a best trade setup. But continuing on, the end of the day, possibly puts in a peak formation high, and the most recent peak formation low was obviously in the New York session. So Asia, we have a high bull engulfment, and again, the market can only do three things. This is a breakout, pullback, and continuation. The peak formation high was locked in above zeros, and in prior videos I've explained, when they put a peak formation in place, do not counter trend that peak formation unless they put an opposing peak formation in place and jam into that peak formation. So in this case, the market continued to put in lower peak formations throughout the day. They've broken out, pulled back, and continued in the London Open. Broken out, pulled back, hitting the stops on breakout traders, and also in that New York window, hitting the stops on traders who may have went short earlier in the first hour. The New York Open brings them back into the high, back above 75 for the sell high scenario in the fourth hour, with this pin hammer here for the explosive blow off back to where the pump began on our Monday. So again, not to move too fast. This entire day was fading back down to where the pump began. This is a 3-session pump and dump template. Even though it's 4 sessions, it's New York, London, New York. Asia is just our initial high and low boundary, which I will be explaining that in more detail in later videos. 3-session setups, which you do not need to necessarily wait for a day 3 setup, but to note, on day 3, if you get a 3-session setup, that is a possible 5-star parabolic move. So again, we go on to our next day, and Asia gives us our initial high and low boundary. We do have a peak formation low prior from the day before, a peak formation low, and a peak formation high from the New York session, which I will draw off. So Asia gives us a high, they break out, hit the stops, pull back, hit the stops, and continue. They put in a high of the day, which at this time you don't necessarily know this is the high of the day. They pull back, hit the stops from Asia's trading session, jamming into that peak formation low, putting in a W formation at closing price, and in the gap, London gap window, for anyone who may have went long at the low of the day, they hit the stops again. So they hit the stops, fail, and reverse back to the high of the day. High of the day triggered. Where's the money? Back at the low of the day, low of the session. Previous day's low was triggered, so where's the money? Previous day's high is where the potential stops or targets are placed. We will continue on to the next day. The market puts in a peak formation low, actually, let me draw a cleaner one than that. Peak formation low, peak formation high, and that is our boundaries or reference points going into the next day. The market breaks out, layers on top, pulls back, and continues with this engulfment off of the closing price. And again, the market can only do one of three things: breakout, pullback, trend, breakout, fail in reverse, or stay in a trading range. Breakout, pullback, and range. But later in the first hour of the London window, they break out again, pull back, creeping trend back down, they pull back, and they continue, putting another ascending structure for the continuation in place. And again, I'm just following basic market structure and also paying close attention to when the market coils or goes sideways, because oftentimes they can initiate a stop hunt pattern, whether that's hitting the stops for a trend, hitting the stops, and hitting the stops once again to reverse, or hitting the stops up top, hitting the stops down low, breaking out, pulling back, and continuing. So again, we have the master pattern again. They break out again, hit the stops, and reverse. But in this case, they hit the stops, pull back, and continue to reverse back down to the low of the 100 pip box. But again, just following the money and taking note of the three things the market always does, no matter what asset, I'm able to develop a thesis prior to my session that I'm trading. And I'm also able to be ready and prepared by focusing on the three levels the market gives us every day: the high of day, low of day, and the closing price, to develop a thesis on the day and session that I'm trading. So again, they break out, pull back, and continue. The London hour pulls back, breaks out, pulls back again. Low of the session, low of the day is hit. Where's the money? Back at the high of the session, high of the day. Now remember, we do have stops or a potential target here. So if you were looking to short this day, just take note of one thing here. When the market consolidates at a high without taking out that high, there's a high possibility that they will explode through that high. We did have 8:30 major red news again on this day, but they explode through this high. They break out, pull back, and continue. Again, they put in a peak formation low, a peak formation high, which is my reference points the next day. So here will be my reference point, and also this would be my reference point. But on the day, VAs in session, once again, they put in our high and low boundaries. They break out, pull back, and continue. Once again, they break out, pull back, and continue. But this whole entire day was a pullback, creating order flow for the move back up. This is also a 3-session dump and pump template back to the high of the day. Dump, higher highs on the inside, pump. These can be identified over 3 sessions, 3 days, or the session itself. So again, just keeping it very simple on the 3 things the market can do: the master pattern, the stop punt patterns that the market may present, and just following the money will give you a bias and a thesis on what the next session or the next day may present. And I'm just reading and reacting. So again, thank you for attending this video. I will have more videos coming soon demonstrating and breaking down 3 session setups, 3-day setups, and also the pump and dump and pump opportunities during the session that may present on any given day on any given pair. Once again, thank you for attending, and may the markets be with you.